Welcome to TradeTheNBI.com. This is John. This report is for April the 3rd, and everyone survived April Fool's Day. Well, this chart goes all the way back to the beginning of the year, and you can see that we've been on a continuation from the election going forward. We're right still at the peaks, despite all of the gloom and doom prognostications. We have had a complete reset of the shakeout and maintained the highs. So that lets you know that we are not overbought at this particular stage, that price can actually move in a significant direction without any effort at this particular point. Now that we've had slow inkling up of the shakeout is important, but it's interesting here with the ABM reset at this particular value, right around 23.57 range. We liked everything that was above the short algo there, the 23.40 level, which is perfect. And then obviously you had the ABMs, which existed right in between there at the 53 level as additional confirmation. That becomes the fail safe, and then of course the ABM goal all the way up at 56, which is just south of where we are now, and that would be from like right up here range. But now that it's reset, it's down a little bit lower. This was the original 65. I think anything above that 65 is when you start talking about propelling yourself to significant move. We did see shorts turn up at this particular point. At the same time, we've had increase in long-term buyers. This is where we would expect, given the date, next day or so, to have more fund money come in, which should provide more liquidity, which will obviously increase our ranges, because I think we're going to start to see a little more of that volatility as things iron out. Still mixed signals on the political front, always going to continue to have some impact, particularly when we're talking about tax reform and these things. A lot of that's been built in. Some of this, though, not to be confused, has to be attributed to potential for inflation. And the change in multiple will reflect that. In an inflationary environment, the market is going to pre-inflate just to accommodate that devaluation. And it's something a lot of people never take into account when they're looking at, why the market, because then they look at just EPS and they go, the multiple's no, the multiple's not too high. It's relative to what the expectation is going forward. And for, nearly a decade, we've had zero expectation of inflation and or increase in that multiple. And so that's got to be factored in. Euro, central bank involvement always gets things going. You had a little short cover rally on the potential with the euro failure. I mean, not the euro failure, but the healthcare failure, and that propelled things. Is it sustainable? It doesn't appear to be. It's going to put us right back at that range because we saw that we got overbought like almost immediately, and then we ended up with a little short spread right after it, and that's exactly what has taken place to this point, coupled with the fact we had the orange moving above the plus 13.5, which is tends to express weakness, particularly, and that's an important one, when you have both falling shakeout and typically, though, you would want to see at that particular point a flat Azure line. If you have a rising Azure at the time that you're getting the move above 13, it means that there's probably a little more continuation left. This doesn't mean that it's still not overbought. It just means that you're going to experience probably some pops that you could add into accordingly. And bonds, this was a great short cover rally that just was crazy wild. I don't see how it sustains itself, but we had the signal from the buy standpoint, and sure enough, it produced quite nicely. And I think, though, anytime you're now below this ABM value, which is all the way at the 120.44, so we can actually increase that all the way up to here, I think that becomes the short opportunity. Obviously, you also have the green ABM, which was right around where that originally was, the 119 range. Not a bad move at that point. And oil, nice increase. No real justification for it, but that's okay. Came in with the same buy signal. Boom. We had a deep shakeout at that point, but it quickly moved right after our buy signal with the orange, a complete reset. And this is actually a setup in the new algorithm also, that when you get this deep, anything below that minus 20, is usually pretty darn good for at least a dead cat bounce, even if you want to call it that. tends to work pretty well. And gold also, we liked it from there. And again, these ABM values that really make it easy as a pivot. Here we have the 5K. Now this is so busy chart. Let's enlarge it just a little bit and get a better idea of what we're looking at here. This reflects the new ABM. So buy signal coming in right down here. Created a little bit of softness going through there, but immediately spiked back up. So it was right in line with where it would expect to go. Now this is still in progress. The older version has much more resets than this one will, and that's simply because it's going to reflect a little bit more stable signals that come from not just dips below. Now, so here shows the old one, whereas the new doesn't reset on some of these flat situations. And most particularly, what it notices is when you have that short signals, even with the rising Azure, it's not going to be resetting under those kinds of conditions, and that happens a lot, particularly on smaller time frames. So it's going to be a bit more substantial. Now, the adjustment that's going to take place coming forward will be for how the stop value works. What it will be doing is utilizing the Fibonacci retrace levels. Even I can't stop the emergency services vehicles making their sirens be heard. But we're looking at a nice move, and what's really going to be fun about this is that we're going to be able to utilize a lot of these Fibonacci values for the adjustments on there. So there won't be an arbitrary, before it used to be the signal came through and then it would start to elevate the ABM from the stop point after a certain number of bars. This is going to do it once it achieves certain level movements, and that will keep it from making a quick spike and then moving back up, where it will then follow very specifically, and it will adjust accordingly. And also too, it will make adjustments for if the gap between the Fibonacci's becomes too large, greater than 1.5 ATRs most likely, and that will prevent too big a range in between, particularly like on a 50K, where you could have, between just the two Fibonacci lines, 20 or 30 points, which that's just too much. You need to be able to have it adjust accordingly. And that also is exposed on the new algo test. If we add that one into it, always good to have that one as well. This really reflects excellent movement from the short conditions as the long algo trails beautifully. So for instance, right here, you see the darker white line as it comes down and it traces across until it gets right to that 23% Fibonacci line, which is actually after the signal comes through. And so it provides an excellent resource to trade long above and or scale out because you're already below it. So, and then as it declines, you really have a secondary opportunity. So, a lot of nice, interesting details growing with this and continuing to add within the setups to adjust the long-short algo as well. And then what's going to happen is the long-short algo is going to blend into the ABM, and you won't even have to necessarily visually notice it. What'll happen is when it turns to short configuration, this will go red, and you can see it will follow probably a little bit better because it will come across. It won't do the dramatic moves going lower and scale out like these do. It will be more consistently following whether there's a trend and then a breach of that turnaround. And what's nice is because you'll be able to go back through and you'll see lots of supports come off the 38% based on the way this is not a true Fibonacci, so don't confuse yourself with thinking that this is the way most people would draw them on their charts. It's not. It's got a variant to it, and it's also completely adjustable, which is a nice feature. If I wanted to reduce it to just the number of bars to know this high right here to this low, I could just count back the bars and literally right click it, format, go to the inputs, and I could literally put in that number of bar values, and it would then move the high down to here and low here if you wanted to go specifically to those kinds of configurations. right now, the 53 bar default seems to be fairly nice as far as capturing it, but certainly is going to be adjustable. And this will also be make strategies, because when they're tied to these values and strategies, that will also be a variant that will show up the best trades. So all exciting. Don't want to run super long here, but good way to start out the month. And there will definitely be updates on this with well, as early as today and even tomorrow. There'll be continual updates on the EBM as well as on the long short algo. So I will let you know as those develop. As always, trade well.